Yeah, the rand trading around 680 this morning, but a CB did go down to about 675, 676 yesterday afternoon, and really being driven by dollar weakness on the back of that QE2 package.
Absolutely, Steve, and I was quite surprised actually the extent to which we've seen the strong rally in emerging markets and risky assets, because I would have expected a lot more of this quantitative easing to have been priced in already into the market. And given that there wasn't a huge change in market consensus relative to what the Fed delivered, it is quite surprising. But nonetheless, I think the market's taken the view that given that the Federal Reserve is adopting this QE in a very gradual fashion, that the QE actually could prove to be even bigger than the 600-odd billion that's been put on the table, because it isn't a big bang approach, it's a gradual approach. And I think so long as that is the case, people are going to continue to use the dollar as a funding currency to buy risky assets, those assets that have got high yields or good growth potential.
So do you think that yesterday might have been a bit of a knee-jerk reaction, because we have seen the rand retracing slightly this morning, and also that gold price after hitting a record high yesterday is also retraced a little bit?
Yeah, of course, these markets don't move in one direction. There's going to be fits and starts. I think that we've got to wait and see if foreign investors continue to kind of accumulate emerging market assets such as the rand, and maybe there was a little bit of a knee-jerk reaction, because if we look at the kind of monthly data, we've actually seen some of these non-residents taking some money off the table when it comes to South African equities. They aren't buying as many bonds. So, you know, we feel that we're getting pretty close to the end still. We don't think the rand can push on much more, simply because this EM story has had a good run already, and you know, we need some kind of a pullback before things get completely out of balance.
Because we did have the Reserve Bank Governor Gill Marcus speaking yesterday and saying that the Fed's easing does have implications for emerging markets, and I think we've seen that across the board, haven't we?
Well, exactly. I mean, you know, so long as interest rates in the US are going to remain low, people are probably going to use that low interest rate environment to search elsewhere for some kind of a return. The question is, how much of those assets have already been bought? And you know, that's going to be determine whether or not people continue to come into South Africa, or perhaps they start either taking money off the table or just keeping a flat position for the time being.
We had gold and Forex reserves out this morning. Net gold and foreign exchange reserves standing at just above $43 billion at the end of October. So it looks like there has been a bit of an increase from the end of September. Do you think that the Reserve Bank and the Treasury have been putting their money where their mouth is?
Well, it's interesting if you break it up. From the government's perspective, it's a very big no. There hasn't been an increase of any magnitude in their deposits with the Reserve Bank. In fact, their balance actually came down. So what we did see is foreign exchange swaps increasing by around $2 billion. And I think that ties up quite nicely with the kind of the size of the deal related to data, estimated to be about 1.7 billion inflow. So they probably bought a few more extra dollars in the spot market, but a lot of it was done through the FX swaps, and I think that relates to the data deal. So the question is the Treasury going to step up to the plate? I think it all depends on whether or not tax overruns are substantial, or that they need to direct some of the kind of foreign direct investment or any other sort of dollar inflows that they can then deposit with the Reserve Bank. But the last month or two they haven't done much, so we're still waiting with bated breath for them. But in terms of the Reserve Bank, they are accumulating through those longer dated FX swaps.
There's nothing much else in South Africa for today. We do have those non-farm payroll numbers coming out of the United States this evening, so I suppose that's really what the market's going to be focusing on.
Absolutely, Stephen. And if we look at the ADP employment report, didn't make for pretty reading. And I think that the risk lies in this afternoon's number coming out probably worse than expected. More people standing in the unemployment queue. And I think if that is the case, then people are probably going to suggest that the Fed is going to have to remain accommodative for longer. And in that regard, probably will be conducive to risky asset purchasing. And in that regard, I think the rand could probably strengthen even a bit further into the weekend. So the reserves figures haven't really deterred the rand bulls, and I think that if anything, the rand could make a few more strides because of that payrolls data if it comes out disappointingly.